after a truly hideous day where rising Treasury yields crush the stock market, let's take the temperature of the actual economy. And to do that, you want a railroad. Take CSX, the big East Coast railroad that can give us some real insight into how businesses from all sorts of sectors are holding up in a really uncertain environment. Let's check in with Joe Hinrichs. He's the president and CEO of CSX to get a better read on the situation. Joe, welcome back to Mad Money.
Great to be here, Jim. Thanks.
Joe, you're a straight shooting guy, and you start your call by saying that it's not good out there.
Yep.
And let's be positive. What would it take to make it good?
Obviously, interest rates coming down would help because the interest rate sensitive parts of the economy, housing, autos, and that brings steel and aluminum, et cetera, room for improvement there. I mean, we haven't hit the 17 million SAR on autos since before COVID. In 5 years now, so that's a big opportunity for us. And then certainty. I mean, everyone's looking for it. We're not going to have it. Right. But where's all this going with trade and tariffs?
Well, to me, in some ways, it's going toward you. If every single company I deal with is very proud that they've lowered the China exposure. Some of that, Joe's got to go for instead of West Coast to East Coast to West Coast. That's your wheelhouse.
It would be. I mean, obviously, if it comes to East Coast ports, it's even better for us. But we do move a lot of traffic that comes from the West Coast ports because it makes its way over to Chicago or Memphis or somewhere and comes onto our network because 2/3 of the population are on our side of the Mississippi River. But yeah, I mean, our exposure to China is less than 10% of our revenue, but still, it's an important part of it. But if we make things in America, better for CSX.
Right, now let's talk about that. I look at these companies and I take it for gospel when I see the president saying, listen, we got $550 billion this and $500 that. I think it's going to be in the Southeast, and that right to work states. You can debate, if you're a union person, you might say Cramer's anti-union. I'm not. But the area of this country that has the workforce that everybody knows is hardworking and doesn't necessarily unionize is your area. So you must be sitting down with some executives and planning where all these plants are going to go.
No question, Jim. Matter of fact, we had 37 plants open on our network this year so far already.
37.
37.
And what's the average before this?
Probably half of that.
Well, that's
but
good.
I'll give you a better number. At the end of last year, we had 500 projects in the works with companies to find locations on our network. That number is now 600. And that's even before this tax bill goes through, because that bonus depreciation.
Have you read that tax bill? It's really good for growth.
The bonus depreciation, especially on factories, is huge.
You're the first person that's talked to me about it. I've been looking at it every day. I cannot believe it can spur a huge amount of growth. Joe,
I saw some stuff today that said it could improve the IRR by 50%.
I agree with that.
On a manufacturing plant. You want to build here? That's a big deal.
Okay, so let's deal with the realities. I mean, you got coal. I mean, Joe.
Volume's good, export pricing's down. That's what's really hurt us. $100 million in the first quarter. I mean, listen, here's the thing. Metallurgical coal, big deal to places like India, other parts of Asia. The volume is still there. Pricing's been depressed because of commodity prices.
Right.
Our rates are tied to that. But I'm telling you, thermal coal in the U.S., going to see a little more volume this year. You know why? We had a cold winter, and now natural gas prices have gone up above $3.50.
You're right.
That coal might make some trade-offs, so watch that area.
But it's not like we're building new coal plants, Joe.
We're not building them. Some of the closures are being delayed.
Right.
And, the president's talking about big, beautiful coal as well as big, beautiful bill. But, yeah, it's a long-term secular decline for sure. But export coal is a big part of our exports to the United States.
Very good point. Now, when someone uses the term missed opportunities in their key end markets, which is what you did, I want to know what those opportunities were and whether they can come back.
Yeah, so in the first quarter, we didn't run the way we wanted to run. There's several reasons for that. Some of it was weather. Some of it was still the effects from the hurricane. And we said on our call about $1 million a day of revenue we missed because of our operational issues, which, that's $90 million that we should have had. Right. We're running a lot better the last 4 weeks. We lost a fourth of our network going north-south because of the Hurricane Helene, and we're still rebuilding that. Won't be back till the fourth quarter, but we're starting to run a lot better, and we feel good about where we are.
What do you think about the theory that I'm coming up with? When we had that, we had a day of liberation, and then we went back a little. We got a little less liberated. The country kind of froze, didn't it?
It did in early April. Well, that's why the market bombed out in early April. We certainly did it ourselves. And then also big flooding happened throughout Tennessee and Kentucky in that time period, too. So that hurt us.
I mean, did you ever read the book of Job? You ever read that in the Bible? I mean, what is that? Like, we should change your name to J-O-B here.
Yeah,
what's happening?
We're waiting for the locusts. But in all seriousness, we control things we can control, and we can do a better job, and our team is doing a much better job.
But you have a resilient network in reality.
We do. It'll be even more resilient when the Howard Street Tunnel gets opened up in Baltimore, and when the Blue Ridge gets rebuilt in East Tennessee. But we're showing signs of being able to deliver the execution we want.
They're building that East Tennessee area up. I know that GE Vernova just got a very big order. The TVA's coming back. You must be seeing a return to a robust nature of all the power that needs to be built in this country. Are you seeing data center build?
We are, and we're seeing that. We're seeing the data center build. We're also seeing warehouses being built because of all the distribution that's happening. I mean, in eastern Tennessee.
That's good for intermodal.
It's good for intermodal. Eastman Chemicals in Kingsport, Tennessee, right next to Mark Costa, a friend of mine I went to school with, is a CEO there. We're seeing growth in those areas, but I'm telling you, we get our network back. If we can get interest rates coming down and we get this tax bill through, I think you can see some more confidence in the economy.
What do you think about using the word trough if we get that we're just going to go like this?
I would hope so. I mean, the interest rate part has to see some progress.
I know, and it's not going our way.
And it's not really moving in that direction right now, right? But the trade stuff is settling a little bit. Now there's more boats coming from China. There's going to be more stuff coming to the ports, so we'll have stuff for the holidays and for back to school and whatnot.
Well, let's talk about that. How is the consumer doing? Should we be looking forward to the holidays? Looking forward to back to school? Are they spending? I listened to Target today. I felt like they weren't spending. I listened to Walmart. Seemed like they were spending.
We are seeing a little bit decline in things like plastics and paper pulpboard
boxes. Well, those are good lead indicators, Joe. Those are good lead indicators.
But those industries are going through restructuring too on the paper side. So some of that's coming from that. But I'm telling you, I think it can come back if we can get some of this behind us and start focus again on running the economy.
Well, I know that it is going to be very difficult, but I think you're right with trough. I do want to talk about why you're here, because it's a good cause. I want everyone to know it. Just tell people.
Yeah, so we're going to be, tomorrow morning with Blue Star Family, Secretary of the Navy are going to be celebrating Fleet Week. And importantly, almost 1 in 5 of our employees, we have 23,000 employees, 1 in 5 has served in some capacity. Railroading attracts veterans. Outdoor sport, capital equipment, 7 days a week, process discipline, a lot of the things that our service members bring to the workplace. We're proud of that. And we're going to be celebrating Fleet Week with Blue Star families and the support we give the military families.
If I were a vet and I heard you say this, and I said, you know what, I like that guy, I like that company, I want to apply, what are the chances that person could get a job?
It'd be very good, especially if it's on the conductor side of things where we're doing most of our hiring.
So you are doing some hiring.
We are doing hiring conductors, certain spots of the country. It takes about 6 months to train, but great career, 6-figure income, pensions, lots of good benefits. But most importantly, veterans make good railroaders. As a matter of fact, I sent a hat personally to every veteran on our network that says veterans make the best railroaders, to each one of them in a thank you letter. That's how much we care. Veterans make the best railroaders. You heard it from a man who knows the railroads, Joe Hinrichs, President and CEO of CSX. Thank you for coming on, Joe. It's always great to see you. Always great to see you, Jim.
Mad Money's back in.